All right. Thanks, Brett. Appreciate it. As he said, Yahoo up 5% today. The stock is still down year to date. The base has had a tough go of it, down about 16% year to date. So that's softened the loss, dampened the loss a bit. The owner of the nation's most visited website earned 11 cents a share, met expectations. It was up 2 cents from a year ago. 34% revenue growth got them to $1.6 billion. So joining us from Sunnyvale, California, is Yahoo's Chief Financial Officer, Susan Decker. Susan, good morning. Thanks for coming on.
Good morning.
Today.
Thank you for having me.
Let's hear your take on this quarter. How do you characterize your quarter?
We feel we're off to a really good start for the year. We delivered numbers that showed very, very strong growth, and we're at the upper end of the range that we had provided 3 months ago to Wall Street. The growth on the top line was 33%, and our operating cash flow growth was 26%. Both were, as I mentioned, in line or better than our forecast. I think that the big message that we were very, very pleased to deliver yesterday was that we're actually seeing 500 million people every month come to Yahoo or Yahoo-affiliated properties on a global scale. That's 500 million people every month, which is really, really impressive and a validation of our strategy, which is all about providing great user experiences and a great platform for marketers.
It seems that the larger Google gets, the less common the absolute apple and oranges or apple and apple comparison we see of Yahoo and Google. Is that a good thing as you say, talk about your strategy versus just outright who's the biggest internet stock out there?
You know, we all compete in a market that is extraordinarily attractive. Online advertising is expected to be north of $30 billion this year, which is amazing on a global scale. And so there's room for a number of players, and we're very fortunate to be one of those top players. We also feel that we have a platform that offers really a unique opportunity to marketers in terms of the breadth of our offerings across multiple formats, text, video, graphical formats. They can buy it from us making a market in price or from our clients making a market in price. They can buy it with multiple forms of targeting. We feel like that 500 million users that we offer marketers is an amazing asset, and feel great about our position in the industry.
Well, it's a well-established fact that money is flowing from traditional media advertising platforms, radio, television, et cetera, online to the online. How much of that flow are you capturing?
You know, we have a very strong position. Our overall sales this year, Rev ex-TAC, expected to be close to a little below $5 billion of that $32 billion. So we're a very, very strong player, one of the top two players.
Talking about ad prices, do you feel that with the competition out there, you'll be able to demand the prices that you'd like?
You know, we talked a little bit about our sources of growth yesterday. The marketing line of our business was up 34% year over year. And of that, about 24% was from volume, new inventory generated by our consumers. Page views were up 24% to 3.8 billion per day. And the remaining 10% was from more revenue per page. A lot of that revenue per page comes from pricing. So we're actually seeing very healthy both volume and price-driven growth. And we think that's a validation of what kind of returns marketers are getting by using our inventory to reach their audiences.
Now, in terms of market share in search, do you see yourself increasing your share of the internet search market? What's your target?
Yeah, if we were talking about market share of revenue, there's two ways to define market share in search, and it's important to clarify those because there's some confusion. Mm-hmm. Market share of queries, and there's market share of revenue. We feel like we're holding our own on market share of queries, and I provided some details on that yesterday as sort of a one-time disclosure because some of the third-party metrics have been confusing. In terms of market share of revenue, we feel like we have some upside opportunity there. We've said that our monetization systems could be improved relative to the competition. We talked a lot yesterday about our implementation program for the new monetization system. In particular, we think there's upside to revenue per query, and we should generate that in 2007 and beyond, and that should help our market share and revenue of search.
That's interesting because obviously the market share of queries is a nice thing, but it doesn't pay the bills. Do you see yourself being able to actually become a market leader again? I mean, there was a day when Yahoo almost owned the space.
You know, we really do. We are a very strong market leader among the very largest advertisers with the most complex needs. So if you took the top 200 advertisers, we have a very big position and a big distance between us and everyone else. We ultimately think that a lot of these forms of marketing will not be talked about as distinctly as they are today in the future. And ultimately, whether advertisers are getting their listings in search, or whether they're getting them in our communications properties, or whether they're getting them in our information and entertainment properties, will become less meaningful. And the fact that we have that breadth of inventory, we see as an enormous advantage for us.
We have 30 seconds left here today. Who's of greater concern to you right now, Google or Microsoft?
You know, I wouldn't want to pick among our competitors. They're all great competitors. We think the existence of those competitors is really terrific for consumers. It's caused us all to innovate very aggressively, and it's made the experiences get better, the services get better. It's amazing if you looked at our product suite today versus 2 or 3 years ago, how far we've come and how far there is still to go. So we attribute that to a great competitive set, and they're there because the market's attractive.
Susan Decker, always a pleasure to have you on our air. Appreciate it. The Chief Financial Officer at Yahoo joining us today.